Hello, agents. Hello, everyone. So I've been doing fixed annuities for a very long time. I actually grew up in a family that did fixed annuities. So when it comes to these pros and cons, oftentimes it seems like people are just stretching to find these cons. So I kind of did a video here to explain away, well, when the cons are pros, but you need cons, so you got to talk about something, right? So I'm going to break into this right now. Let's take a look at what I am talking about. So pros and cons. This is basically, I'm talking about multi-year guarantee annuities, the MYGA. That's what I'm talking about right here. So traditional fixed annuity, multi-year guarantee annuity. And what is this? What are the pros of a MYGA, multi-year guarantee annuity? Well, the number one for all annuities and a tax deferred accumulation, right? So you grow that money and you don't have to pay the taxes on it until you pull the money out, right? There's no tax on the interest, not like a CD where you get a statement every year telling you how much interest you earn. It's taxable interest, right? So that's one pro for the MYGA. It's a long-term pro, one of the basics, if you will. A guaranteed interest rate. So the good thing about it, it's not a trust me rate where some insurance companies give you a rate for year one and then it drops to a trust me rate thereafter. A multi-year guarantee annuity won't guarantee the interest rate for the entire time. So that's one of the pros of a multi-year guarantee annuity. If you look at these, you can find them with penalty-free withdrawal provisions such as 10%. So if you want liquidity in your product, you look for one that offers liquidity. So that's a pro. You can actually get access to your money, principal, and some of that interest you earned with these 10% free withdrawal provisions in an annuity, in a multi-year guarantee annuity. And that's going to be available at the time of issue. You'll be able to know everything about your product. And the safety, right? They're safe, right? They are guaranteed by the claims paying ability of the insurance company, a multi-billion-dollar usually insurance company. So that's, their safety, right? So you have the pays claiming ability. Now we look at some of the cons, and I hear these are cons other people have come up with, and I'm going to explain these cons to you. So the surrender charge is a con, right? Why? Why is a surrender charge a con? Because if you leave early, you break the deal you made with the company, they're going to ding you for it. That's a con to have a responsibility? I don't think so. Actually, I find the surrender charge not to be a con. I found it to be a pro. Why is the surrender charge a pro? Because it limits the potential downside. You know exactly how much is at stake if you leave early. It has a limit on how much you can lose. Not like a stock, right? You could put money into a stock and lose 100% of your money in a day. You can make it in a day too, right? So that's a pro of a stock, but so here it's a pro because you're limited. You know exactly if you want to leave what you're going to get. It's not a con. It's a pro, in my opinion. Next is the market value adjustment. What's a market value adjustment? Well, a market value adjustment is tied to the surrender charge. Again, if you break the deal you made with the insurance company, a client breaks the deal with the insurance company, and interest rates are higher than the time they bought the product. So, hey, the bank CDs just went to 12% for 1 year. Let's get out of my annuity. Right? So it's a con because the insurance company is now going to ding you more than just the surrender charge with the market value adjustment. Interest rates are up. That's a con, right? I disagree. I find the market value adjustment is a pro. Why? Because it protects the insurance company where your money and all your clients' money, if you will, is at from a run on the bank. So if interest rates do go to 12 at the bank, not everyone's going to run away from make the insurance company have a solvency issue, right? It protects the insurance company from a run on the bank, the market value adjustment. And also, conversely, what we've seen over the last 10 years is a market value adjustment can also limit those surrender charges. So if interest rates are down, guess what? Your surrender charge is going to be lower. Again, I call it a pro, not a con. So the market value adjustment right there being a pro, not a con. Lack of liquidity is our next one. So I'm just going to put an X in there right away because we already talked about right here, penalty-free withdrawal of 10%. So how can you call a pro of liquidity yet a lack of liquidity? I mean, you don't have 100% access to your money? Well, what do you do when you lock up your money? Even a CD at the bank's going to limit you to access, right? You're going to have to give back your interest. It has a charge too. So lack of liquidity, we're just going to wipe that out as a con. We're not going to put it on the pro side because we already have the 10%. We're just going to discount it. We're not even going to use it. And it's not FDIC insured. Okay, this is a con. It's not FDIC insured. In the bank, a bank can go out of business and the government has the ability just to print money and give it to you. So that's a pro for the bank and a con for annuity. You don't have the ability, if the insurance company's pays claimability can't handle it and there's a problem, we don't have FDIC backing us up. But what is it if we don't have FDIC? Is there anything? Yeah, there is. It's in the contract But you better not talk about it, insurance agent. Don't talk about this. You can't talk about it. We're going to put it in every contract you issue, but you better not talk about it in advance. So if you want a link to this, it's the Life and Health Insurance State Guarantee Associations. And here's a link right here if you want to go check it out yourself. I'll have a link in the description as well. But every single contract is going to have these 2 little pages or more or less that's going to explain coverage in the event the insurance company has a problem. But don't talk about it. As you can see, she's confused as I am about why you cannot talk about the insurance commission. But take a look at it. And if you guys are interested, I get my pictures from Shutterstock, and I'll give some credit down here to the contributors on some of the images I do and some of the stuff I create myself. But anyway, sidetrack. So in the long run, so fixed annuity agents, I'm going to tell you, keep up the good fight. Keep pushing away, even though the industry hammers you down and kind of makes you feel like your hands are tied behind your back, right? The annuity agents' hands are tied behind their back on the limited, what they can say, what they can do. We can't say they're safe. We can't say a lot of things that annuities really are. Traditional fixed annuities really are these things. So what I tell people is go Google it, Google the safety of these things and Google what annuity agents can talk about and not. And the most frustrating thing is to see, while other industries seem to have a much more gray area in this, our hands are tied behind our back because we're insurance, we're guarantees, we're client oriented, and we don't want to push if an insurance company has a problem. No, because we're going to be pushing the security and the safety based on the company and their surplus and how they can pay claims now. So overall, when you're talking about a multi-year guarantee annuity, if a client's interested in one, the pros far outweigh any cons for these products. Just make sure that's suitable for your client. So if you sell a suitable product, suitable time frame, it's going to be very pros and very few cons for your client. So anyway, I think that's the end of my presentation here. I hope you all enjoyed that. Pros and cons of fixed annuities. And if you have any questions, of course, give me a call at the number right here below, and I'll be happy to talk to you or run illustrations or give you more information about anything you need on fixed annuities. Agents, I hope you all have a great week. Today's Monday, and the 10-year just hit 3.03, so that's good. Hope you all have a great week. Talk to you soon.